The federal government has confirmed the rollout of the World Bank blockchain-powered fund change system in Nigeria, marking a major step in tightening oversight of donor-funded projects and reducing financial leakages. The announcement was contained in a statement from Bawa Mokwa, the Director of Press at the Office of the Accountant General of the Federation, following a workshop in Abuja. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okeri. The Accountant General of the Federation, Dr. Samsudeen Babatunde Ogunjimi, described the deployment as a new phase in the management of the development funds. He says the blockchain platform will strengthen transparency, accountability, and efficiency in tracking donor inflows, with 6 World Bank funded projects set for onboarding in the first phase. The workshop brought together project coordinators, accountants, and financial management units to improve reporting standards and reduce waste in project execution. Ogunjimi also announced the adoption of a new financial management manual as the standard guide for all financial transactions under World Bank supported programs. He urged implementing teams to use the manual to minimize infraction and sustain Nigeria's positive rating with the bank. A key reform feature is a new policy that bars the removal of personnel responsible for project financing management within 6 months of a project closure. The measure agreed between the OAGF and the World Bank is intended to prevent lapses, undocumented advances, and disruption. Incoming officers must now understudy outgoing officers for at least 3 months before taking full charge. Ogunjimi says continued collaboration with the World Bank has reduced lapses loan from $18 million to $7 million, a 61% drop, and it cut undocumented advances by 15%. It stressed renewed commitment to documentation, timely refunds, and strict compliance with World Bank rules. Speaking on behalf of the World Bank Country Director, Senior Financial Management Specialist Akram Esho-Gabi applauds the reform and called for sustained institutional support to improve project outcomes. FundChain is a blockchain platform developed by World Bank to create a tamper-proof and end-to-end digital trade of project funds, offering real-time visibility for authorized stakeholders. The system has already been piloted in 13 projects across 10 countries and expected to expand to about 250 world-financed projects globally by 2026. The World Bank remains Nigeria's largest multilateral creditor. As of June 30th, 2025, Nigeria's external debt stood at $46.98 billion, with the World Bank Group accounting for $19.339 billion, representing a 41.3% of the total. The introduction of the FundChain places Nigeria among early adopters of the blockchain-driven public finance reform. If effectively implemented, the system could significantly reduce leakages, strengthen project monitoring, and rebuild trust in donor funds program. However, success will depend on capacity building, strict compliance by implementing agencies, and sustained institutional support. The reform also highlights Nigeria's heavy reliance on World Bank financing, making transparency in fund management even more critical. Nigerian foreign exchange reserve have climbed to 7-year high of $46.7 billion as of November 14, 2025. According to the Central Bank of Nigeria, Governor Olayemi Cardoso, represented by the Deputy Governor for Economic Policy, Dr. Mohammed Abdullahi, says the reserve level is the highest since 2018 and reflects renewed investors' confidence, strong oil earning, and improved balance of payment inflows. Speaking at the 28th anniversary of the Monetary Policy Department in Abuja, Cardoso noted that the current reserve position provides 10.3 months of import cover, boosted by sustained inflow and increased participation in Nigerian financial markets. He says the stronger reserve have supported the Naira stabilization, with the gap between the official and the Bureau de change window narrowing to below 2%. He also linked the improved reserve profile to recent disinflation. Headline inflation fell to 16.05% in October 2025, down from its November 2024 peak of 34.6%, marking 7 consecutive months of decline. Core inflation has also begun to ease. Cardoso highlighted growing international confidence, pointing to recent upgrade from the 3 leading global rating agencies and Nigeria removal from the Financial Action Task Force grey list. He credited these developments to ongoing reform and tighter monetary conditions. Reflecting on the 20-year of monetary policy evolution, the governor praised the Monetary Policy Department for key reforms, including the introduction of the monetary policy rate, the interest rate corridor system, and improved communication frameworks. He says Nigeria's shift towards a full inflation targeting regime is a strategic priority aimed at deepening policy credibility. The Director of Monetary Policy Department, Dr. Victor Obo, says Nigerian economic recovery has become strong enough for citizens to see a clearer path forward. Recalling the fragile economic environment of 2023, he described that the period as one marked by mismanagement, FX backlogs, high inflation, and depleted reserves. He contrasted it with current gains such as a stronger Naira, declining inflation, and restored institutional confidence. Obo cautioned, however, that challenges persist, including the need for improved fiscal coordination across all tiers of government. He emphasized that inflation targeting will only be effective if backed by structural reform and credible transmission mechanism. Guest lecturer and former MPC member Professor Abdul Ghani Gaba delivered an extensive review of global economic thought, while IMF resident representative Dr. Christian Ibeke reiterated the fund's support for Nigeria's ongoing reform. Nigerian reserve boost come less than 2 weeks after the federal government secured $2.35 billion from the international debt market through a dual tranche Eurobond issuance, adding fresh external inflow to the reserve. Nigerian reserve surge signals a significant turnaround from the instability of the recent year. Stronger FX buffers, narrowing exchange rate gaps, and consistent disinflation suggest the policy tightening, the transparency reform, and beginning to yield results. However, sustaining this momentum will require continuous fiscal coordination, disciplined implementation of the monetary reform, and further structural upgrades to prevent a relapse into past volatility. Nigerian pension fund assets have grown by 22.03%, rising by 4.71 trillion naira to reach 26.09 trillion naira as of September 2025. According to the latest data from the National Pension Commission, the increase reflects a stronger year-on-year expansion of the contributory pension scheme. PENCOM monthly industry report shows that pension assets climbed from 21.38 trillion naira in September 2024 and crossed 25 trillion naira mark in July 2025 before sustaining the upward trajectory through the third quarter. Federal government securities comprising bonds, sukuk, Treasury bills and agency securities continue to dominate PFA portfolios, accounting for about 60% of total assets between September 2024 and September 2025. PFAs expanded their holding in these instruments by roughly 3 trillion naira, signaling sustained confidence in government debt amid economic uncertainties. The equity market also benefited from the increased pension participation, with domestic ordinary shares growing by about 1.6 trillion naira year-on-year, driven by stronger valuation, improved liquidity, and renewed investors' appetite. Corporate debt instruments received higher allocation as well, reflecting improved credit condition for top-tier issuers. RSA membership rose to about 10.9 million, following tighter compliance enforcement, new private sector registration, and the expanding reach of the rebranded personal pension plans. PenCom has increasingly emphasized the need to deepen participation in the contributory pension scheme, particularly within the informal sector. Speaking at the recent pension industry conference, PenCom leadership stressed that the informal workforce, estimated to about 70 to 80 million people, remains largely excluded from the structured retirement system, despite driving much of the economy. The Commission says its revamped micro-pension framework aims to close this gap through digitization, improved transparency, and simplified onboard contributors under the personal pension plans now receive instant confirmation of the payment and real-time access to their statements, while the PFAs and accredited agents are deploying more mobile-friendly technologies to widen access. Fund under the PPP will be invested through dedicated structures, offering both conservative and growth options tailored to subscribers' preference. The surge to 26 trillion naira underscores the strength and the resilience of the Nigerian pension industry despite broader economic uncertainty. PFAs continue to rely heavily on government securities, reflecting both limited investment alternatives and relative stability of sovereign instruments. The growing exposure of equities and corporate bonds suggests improving market confidence, while rising RSA membership indicates progress in expanding coverage. However, the sector long-term sustainability aimed on successful integrating the informal workforce, where most of the Nigerian labor force remain unpensioned. The success of the updated micro-pension framework will be critical to closing the gap and deepening financial inclusion. Nigeria's 2025 licensing round is already attracting early attention from major international oil companies, boosted by renewed confidence in Nigerian Upstream Petroleum Regulatory Commission's commitment to transparency and regulatory stability. Interest surge after French energy giant Total Energies commended the Commission for conducting a transparent and credible 2024 mini bid round. The positive feed came during a visit by the high-level Total Energies delegation led by the president of the Total Energy Exploration and Production, Nicholas Terras, to NUPRC Chief Executive Gbenga Komolafe in Abuja. Terras, accompanied by the senior executive, reaffirmed the company's growing confidence in Nigeria's upstream environment. The NUPRC says the courtesy visit highlighted global operators' renewed trust in the country's regulatory direction. Komolafe restated the Commission's determination to maintain a predictable, investors-friendly framework, noting that the Petroleum Industry Act has eliminated uncertainties that previously deterred investment. He also commended Total Energies for its work under the Obagi Host Community Development Trust, which he described as a demonstration of compliance with the PIA Host Community provision. He encouraged the multinational to actively participate in the 2025 licensing rounds, which opens on December 1, 2025. The round is structured to attract high-level investment, new entrants, and fresh exploration across both mature and frontier basins. Terras praised the governance of the 2024 mini-bid round and says the strengthened regulatory framework position companies like Total Energies to benefit from the upcoming exercise. He reaffirmed the company's long-term commitment to Nigeria, describing the country as a strategic center in its global portfolio. The 2025 licensing round will be Nigeria's most extensive acreage offering since the passage of the PIA in 2021, while the 2024 mini-bid round targeted deep water and frontier blocks. The new round is expected to include mature, marginal and additional frontier terrain to widen investors' participation. The NUPRC plans to deploy enhanced transparency system, digital bid submission, stricter timeline and clearer fiscal time to attract both global and domestic investors. The Commission also aimed to strengthen acreage management, shorten contracting cycle, and deepening host communities' engagement to reduce disputes and accelerate project delivery. Nigeria's oil sector appears to be regaining credibility after a year of uncertainty. Early interest from Total Energy signals that recent transparency measures, digital bid processes, and PIA-driven reform are restoring confidence. The 2025 licensing round will be a critical moment for Nigeria's strong participation from major operators would help unlock new reserves, boost government revenues, and counter growing competition from frontier markets like Namibia. However, success will deepen maintaining regulatory consistency, ensuring quick contracting cycle, and effective managing host community relation. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government policies. Nigeria's most capitalized firm on the Nigerian exchange, known as stock worth over 1 trillion naira, SWOT, remitted a combined 2.55 trillion naira in company income tax between January and September 2025. The figure represents 92.7% of the federal government total CIT target of 2.75 trillion naira for the entire year. This marks a 63.74% increase from 1.56 trillion naira paid in the same period of 2024 and stands as highest 9-month CIT performance ever recorded by the top corporate. By comparison, SWOT full-year CIT contribution in 2024 surpassed government projection, becoming a central pillar of Nigeria's non-oil revenue ambition. Their strong performance has helped push the 2025 non-oil revenue target to 5.71 trillion, up from 3.52 trillion naira in 2024. The reported CIT figures do not yet include expected dividend earning from state-owned enterprises such as BOI, DBN, and LNG, suggesting room for even greater revenue once these inflows are captured. Financial institutions and upstream energy companies led by tax surge, buoyed by firm interest margin and improved oil production. However, import-dependent sector struggles. MTN Nigeria CIT fell sharply by 82.98% to 21.55 billion naira due to foreign exchange pressure, while Dangote Cement posted 10.37% decline to 115.39 billion naira. Analysts warn that weak macroeconomic condition could drag overall tax momentum if this sector do not recover. The federal government's 2025 CIT target of 2.75 trillion naira is almost double the 2024 projection, signaling confidence in improved corporate earning and aggressive tax mobilization. Analysts note that the contribution from only 22 listed firms highlights the potential for the greater revenue if the more than 1,000 unlisted but viable companies are properly captured in the tax net. Estimates suggest total CIT could exceed 4 trillion naira with broader compliance. All right, still on stock market. The Nigerian stock market is losing steam after months of exceptional gains, with multiple indicators pointing to fatigue in ongoing bull run. The NGX All-Share Index, which had soared on the back of the reform and strong corporate earnings, has shed more 7 trillion naira in November alone. On Tuesday, the All-Share Index slipped 0.12% to 144,986.51 deals, extending a bearish streak triggered by heavy profit-taking market. Market capitalization fell by 110.2 billion naira to 92.2 trillion naira, dragging year-to-date return down to 41%. Selling pressure in major stocks include Zenith Bank, UBA, Access Corp, PZ, NGX Group, and Owando weigh heavily on the market. Living Trust led the losers chart, while the NCR topped the gainers chart and broke its 52-week high of 30.95 trillion naira. Tantalizer posted the highest volume, with Adel recorded the highest value, traded at 9.5 billion naira. The ASI is now down to 3.19% for the month after recovering from a 2010 level low earlier in November. Analyst says the pullback reflects an overstretched market following sharp annual gains of more than 50% across key indicators. Despite the recent pullback, analysts expect a possible rebound, projecting the ASI could reach 150,000 points by late 2026 if policy clarity improves. On the value banking and insurance stocks, many trading below book value could offer bargain opportunities. Long-term optimism is supported by expectation that Nigerian non-oil GDP will grow 3.6 to 4% by 2026. The current decline appears to be normal correction after an overheated rally intensified by tax policy uncertainty, foreign investors outflow, while market foundation remain supported by reform and strong corporate performance. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms using @GlobalTVNG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.